The Sky Diversified Income Fund of Fund invests in multiple income funds, and part of that process was investing in offshore income funds. We do not like to have currency exposure in the fund itself, so we had to hedge within the South African unit trust all currency risk. And from a regulatory perspective, it is extremely cumbersome to do it in the local fund, because for each 100 Rand of a hedge, you need cash that backs that hedge. So the solution that we had was, why not, instead of investing in multiple offshore funds, create an offshore conduit where you have a single platform that can invest in global assets, and you hedge the currency risk within that conduit, being a UCITS fund, extremely secure. And over and above that, doing it in such a way, it enabled us to invest in a much broader platform. Whereas if you invest directly, you're going to invest in one or two funds. If you invest from the global platform, you can invest in multiple funds and other assets to give the domestic Sky Fund an extremely broad and diversified exposure to underlying global assets, and all that into Rand, so no currency risk. So over the past year and a bit, the fund has actually done reasonably well. So the first phase, the first 3 or 6 months, fund performance was sort of there or thereabout, but it was in a ramp-up phase. We do not believe in a fund launch where you go slap bang into all assets and you buy an expensive asset at the wrong price. We had a gradual implementation process for the first 3 or 6 months, and thereafter the fund settled down, and performance over the past year and a half has actually been quite good, adding a lot of value to the Sky Fund. The TBI Global Multi-Asset Income Fund listed in the beginning of the year on the JSE as an actively managed ETF, which is a extremely flexible tool for local investors, not just the Sky Diversified Income Fund of Funds, but also enabling domestic investors to gain exposure to a conservative global multi-asset income fund in a very simple and elegant manner. Local investors simply, via their JSE broker, purchase shares in the fund, no exchange control forms to be filled in. It's a clean and elegant way to gain exposure. The fund, also being an inward listed actively managed ETF, will pay dividends to its investors, which from a tax perspective is very attractive, and that will obviously boost the performance of the underlying investors, notably corporate investors, as the corporate investor is not taxed on dividends. A nice part of this fund, being an actively managed ETF and listed on the JSE, is that the fund's got an active market maker. Jane Street is constantly making a double on the JSE for investors if they want to purchase or redeem shares in smaller volumes. As soon as an investor wants to invest or redeem shares in large volumes, 10 million and above, we'll do it via the primary market. The fund itself is extremely liquid. So for a large investor to access the fund via the primary market, is as simple as we arrange for the investment via your broker. Shares are created, and on a redemption of the shares, same thing. We create cash in the fund. The underlying fund is highly liquid. We redeem the shares and your cash is paid into your JSE account. Smaller investors will be facilitated via Chain Street. So if you look at the TBI Global Multi-Asset Income Fund and compare that to other global funds, the fund is broadly diversified and very importantly listed on the JSE. The ability to invest via JSE in a fund like this is simple, easy and tax efficient. To access global income funds via other platforms will be less tax efficient, and it will entail that you will have to externalize cash onto the global platforms to achieve that. If we look at the TBI Global Multi-Asset Income Fund composition is extremely important. We allocate risk to assets where we get a high probability of a positive return. But in saying that, it is important that the fund is invested in a very diversified manner. So how do we put this fund together? We've got a couple of building blocks. The first building block is the conservative block. We look at what we call short duration, high quality cash. That means it's instruments that is like money market instruments or funds that are invested in money market type instruments. We then start considering adding small bits and pieces of risk into other asset classes or risk vectors as we call them. So we can invest in levels of credit. So instead of just investing in government bonds or government paper, we can invest in corporate paper. So the majority of the fund tends to be invested in what we call the stable pot, high quality, lower duration type of assets. But then bits and pieces are added to the fund opportunistically when we see the potential. Small bits into the equity markets when we think the equities are cheap and the return potential is good. Potentially small bits and pieces in property and or commodities. And a good case in point currently is the fund's got an allocation to gold. Gold is an extremely good diversifier in a market where we are now, where risk is on an elevated level. So also in a growing global environment where growth is good, maybe not in the current scenario, but if we look back a year ago, one would add small bits and pieces and slightly high yielding credit. So a fund needs to have some risk assets, as we call it, or real assets like property, or alternatively defensive assets. And this mixture is constantly massaged so we can get a proper diversified broad base fund composition to achieve our investment objective. So the investment by the Sky Diversified Income Fund into the TBI Global Multi-Asset Income Fund is one of the core buckets. It's a core element of the fund itself. Extremely important. The Sky Fund will always have a small bit allocated to stable, dividend-producing domestic assets, some allocation to domestic income funds, and an allocation to the TBI Global Multi-Asset Income Fund. By inward listing the fund, the potential contribution to return additional contribution to return is substantial. The fund previously received returns from the TBI fund in the form of capital gain. So the tax nature is capital gain, and the inward listing changed this capital gain nature to a dividend paying instrument, whereby especially corporate investors will benefit substantially. So the Sky Fund from now on will receive a dividend for the return will be in the forms of dividends, which will boost the Sky Fund's return because of the favorable tax treatment that corporates receive.